Okay, I'm going to go on mute. 3, 2, 1, you're on.
Now, for simplicity, I've simplified the math a little bit, but it'll give you a general idea. Let's assume that you pay $10,000 a year in health insurance premiums, and you have $5,000 in out-of-pocket medical expenses and dental expenses for a total of $15,000. Now, if you have no plan in place, you can only deduct your insurance premiums, assuming you're self-employed, which saves you federal and state taxes. You get no savings on self-employment taxes. So let's use an estimate of a 20% blended rate between federal and state taxes. In this case, you would save roughly $2,000 in taxes. However, if you hire your spouse and put the insurance in their name and have a health reimbursement account, otherwise known as an HRA or Section 105 plan, you can deduct pretty much everything. And it becomes deductible for federal, state, and you get to add self-employment tax savings, which is roughly an extra 15%. So let's take that same 20% rate from the federal and state tax in the first example. We then add self-employment taxes, and this increases the blended rate to about 35%. Now, what does that mean to you? You would save $3,500 on your insurance premiums alone, and you get to save another $1,750 a year on your out-of-pocket medical expenses for a total of $5,250 in tax savings. This is cash in your pocket. You just increase your savings by almost $3,000 by having an HRA plan. Let's assume if you have $20,000 in insurance premiums and $5,000 out-of-pocket medical expenses for a total of $25,000. Without a plan, you simply deduct your premiums, which save you roughly, the math here is wrong. Let's do it again. Let's assume that you have $10,000 in insurance premiums and $5,000 out-of-pocket expenses for a total of $15,000 in medical expenses. Now, without a plan, you simply get to deduct your premiums, and that'll save you roughly $4,000 in taxes. However, with a Section 105 plan, or otherwise known as Health Reimbursement Account, HRA, you get to deduct everything, and that would save you roughly $5,250. We're talking almost $2,000 more by having an HRA plan. Sound too good to be true? Hundreds of thousands of tax-savvy business owners do this every single year. These plans are available, but need to be set up correctly by people who know how to do it. In fact, my company alone uses TASC. It's a third-party administrator. They know how to do it. They have experts in the field, and that's why I use them. Just a little more about TASC and why I recommend them. They are a national third-party benefits administrator headquartered in Madison, Wisconsin. They have over 1,000 employees, and they manage plans for over 100,000 small business owners, just like you and me. In the last 10 years alone, they have saved over $1 billion for their clients, and most importantly, made sure that their clients were adequately served and to make sure that they were fully compliant with the IRS.
Okay, I think that's good, except you're right. We had the 20,000 wrong. But then I think you said 4,000 in tax savings.
20%, correct. My numbers are right.
Should be, you're doing 10,000 in your premiums.
And what rate are we using? 20% or 10%?
Yeah, 20%. So it should be
4,000, which is what I said. That's what I said.
Yeah, I think that is what you said. Okay.
Okay. Listen to it and see if it's right. If it's not, I'll just re-record something else.
Okay, sounds good. I think we're good though.
But I think we're good because I did what I'm supposed to do. But if it's not right, just call me back and I'll do it again. Okay, Dave?
No, on the first one though, did we do it right on the first slide then?
Yes.
Okay, so we're good on both.
Let me make sure. Yeah, 20% blended rate on $10,000. Yeah. What happened was we had a 20% blended rate on $10,000, and then we use the next slide, and then let's assume we have a $20,000 insurance premium.
Let's do the second one, but do that at the 10,000 too, just for consistency.
Okay. All right. Let's do the second
change
one.
that to 10,000, then it'll be a $2,000 tax savings. Just
no, it's 20. Right. I got it. Okay. Let's do it again.
All right. I'm going on mute right now.
Let's assume that you have a $10,000 a year health insurance premium, and you also have $5,000 of out-of-pocket medical and dental expenses for a total of $15,000 of medical and dental expenses in a year. Now, without an HRA plan, you simply get to deduct your health insurance premiums, which will save you roughly $2,000 in taxes. However, with a Section 105 or a HRA plan, you get to deduct everything for federal, state, and potentially Social Security. And that would save you about $5,250. That's nearly $3,000 more in your pocket as a result of having an HRA plan.
Okay, sounds good. All right, I think I got it. I'll start working on this.
Super. If you need to record anything, don't worry about it. Just give me a call. I promise I won't bite you. I won't. I don't turn into.
Sounds good. I appreciate that.
I don't get hairy when the full moon comes out, as far as I know.
I was starting to wonder the last phone call. I'm like, ooh, ouch.
Can I? I know. I was just pissed off. I was on the phone for an hour with the bank, and they weren't helping me, and they were just. I was just pissed off.
Yeah, no problem.
Where am I? Can I delete this?
Yeah.